We invest globally, so we're looking for the best opportunities we can find in global markets, and that's in public equity markets, but also in private equity. So we're taking advantage of the closed-ended nature of the trust to allocate capital to private market opportunities as well as public. We're diversified. My role is to select underlying managers and strategies that are typically run in a relatively concentrated fashion, specifically for the trust, and to put them together in a manner which is consistent with our overall objective of delivering long-term growth in capital and income. The reason for this approach of diversification is that by blending together a range of different approaches, diversified by geography, by sector, by style and approach, it means that we can add returns for shareholders while reducing risk, which basically means that we should provide a smoother performance journey for shareholders through time. As a closed-ended fund, we have the advantage of not having to deal with inflows and outflows from our underlying capital base, and that means that we can take a long-term approach to investment. One of the advantages of that is that we can lock up liquidity, which means we can take that very long-term view and undertake investments where we have a very long horizon in terms of the commitment of capital to generate returns. So the structure lends itself to that long-term perspective and enables us to take those private market opportunities. We've got a lot of experience in this area. We've been investing in private markets since 1942. And we've had very good success. We've typically found that our private market opportunities have yielded excess returns over public markets. So it's an advantage that we have as a trust, an area that we've got a good track record in terms of delivering good returns for shareholders. We run a diversified portfolio, investing in a range of underlying strategies, regions, and so on. And therefore no single strategy, nor indeed no single stock or group of stocks really exemplify our approach. But there are, I think, some interesting examples which draw out some of the approaches that we have. Firstly, Microsoft. Microsoft is one of our larger holdings, been extremely successful position for us. What's interesting is that it's held in a number of different parts of our overall portfolio. So our US growth manager, T. Rowe Price, has a position in Microsoft. Our US value manager, Barrow Hanley, also has a position in Microsoft, and our global income component also has a position in Microsoft. And that really reflects the attractions that Microsoft has as a company from a growth perspective in terms of longer term growth opportunities. Also from a valuation perspective, it still, despite the fact it's been growing very strongly, has valuation attractiveness. And it pays a yield which is growing through time. So it's attractive in terms of the quality of the business model, good growth prospects which are attractively valued. Facebook's another interesting example, not from a technology perspective so much, but we actually invested into Facebook back in 2005. Before it was a listed company, we invested through private equity into Facebook. It was only a $100 million company, only 1 year old at that point. Today, it's close to a $500 billion company. So we've seen Facebook through the private markets into the public markets, where we earned almost a 400 times return on that investment, through to a very successful stock market performance in recent years. Amazon, we invested in 2006. Again, we've held that stock for more than a decade, and it's been very, very successful for us. So those are all technology stocks, slightly different angle to each of them. But at the other end of the spectrum, we can look at Shell. We still own Shell, having bought it back in 1925. So I think that demonstrates the long-term approach that we have to selecting good businesses and holding onto them for the long term. We're a diversified trust, and we're looking to provide a one-stop shop for investors looking to exposure in growth assets, listed equity and private equity. So for investors looking for that core holding that's highly diversified, F&C Investment Trust is a good choice. We pay a dividend. We paid a dividend in every single one of the years since our formation in 1868, and a rising dividend in each of the last 48 years. And we're also relatively low cost. Our ongoing charges are only 65 basis points. The trust has generally performed well over recent time periods. There's a range of different comparators that one can use to assess performance, and we've done relatively well against benchmarks and against other products in the market. So there are a range of products, open-ended and closed-ended, active and passive, that one can use to assess how we have done in terms of management of the portfolio and the returns that we've generated for shareholders. We are around top quartile against our closed-ended competitors over the last 3 and 5 years. And over the last 5 years, we've delivered a return of close to 100% for shareholders, so doubling their investment.